In this video, we are going to compare two types of investments: investing in the stock market, whether in stocks or ETFs, and investing in P2P lending. How these types of investments are similar and how they differ. Let's break it down step by step, and I'll explain it to you very clearly without technical jargon. Before starting, I would like to invite you to the Telegram community where you can share experiences and opinions with other investors. And I would also like to invite you to subscribe to this channel so you don't miss more interesting videos about investments. Now, let's go for it. Let's start by seeing what we are investing in when we invest in the stock market or in crowdlending. When we invest in the stock market, what we are essentially doing is buying a small part of a company. If you buy, for example, a share of Apple, you are buying a small part of that company. And how do you make money when you invest in the stock market? Well, in two different ways. We make money if the price of that stock goes up and we sell it for more. Or we make money if the company distributes dividends, that is, if it shares part of the profits. So when we invest in the stock market, we are betting on the future of that company. If the company does well, we win. On the other hand, what is investing in crowdlending? Here, investment works in a different way. Here we are not buying stocks or part of a company. What we are doing is lending money, literally. We are lending money in some cases to people, it can also be to companies or real estate projects. And in return, they will pay us the interest on this loan. For example, we lend money to a company and that company usually pays us back the interest on that loan monthly, and at the end of the loan they usually return the capital we invested. Who are we giving our money to, or where are we putting our money? When we invest in the stock market, our money goes to large publicly traded companies. In crowdlending, it's different. Here it goes to smaller companies or people who need funding, but it is a more alternative investment. Regarding the profitability we can obtain from each of these investments. In the stock market, the historical average return is around 7 or 8% per year in the long term. But be careful, because this does not mean that every year it increases. There are years when investing in the stock market results in losing money, and other years when, in the long run, that profitability is achieved. It is an average profitability. On the other hand, in crowdlending, many platforms normally offer between 8 and 14% annually. We can earn an average of around 10%, and this will depend on what strategy we follow, which platforms we invest in, and also keeping in mind that there could be losses. But here the return is more predictable than it is in the stock market. In fact, we will usually know the return we are going to get, which will also be on a monthly basis. I mean, we will be receiving interest on a monthly basis in most cases. Regarding the risks of investing in each of these investments. When we are investing in the stock market goes up and down every day. It is volatile. You can earn a lot or lose a lot in a short time, especially if we are speculating in the short term. The biggest risk of investing in the stock market is that we buy when the market is high and have to sell when the market is low. In those cases, we are going to lose money. On the other hand, in crowdlending, we are not going to see these constant ups and downs, but the risk lies in defaults, if payments are delayed or if a loan stops being paid. If the borrower does not comply, if they do not return the loan, we may lose part or all of the money. Regarding liquidity, if tomorrow we need our money, we could recover it because in the stock market, we could sell our options in seconds. It's easy, it's very fast, so it's a very liquid investment. Now that doesn't mean we will have obtained a return. If we sell it at any time without considering whether the stock we bought has risen or fallen, we could be losing money. But we can recover our investment. In the case of crowdlending, we can't always recover our investment. Usually, we have to wait until the loan is completed. However, there are platforms that provide us with secondary markets. In the secondary market, we will be able to sell our loans to other investors, and as long as there is another investor who wants to buy it, we will be able to recover our investment. Now, of course, here we have to consider that there must be another investor willing to buy that investment, and also in some cases for another investor to buy our investments, or do it in a faster way, we will have to set the investment at a lower price. That means we could lose money when we sell in the secondary market. But on the other hand, we could also make money by selling in the secondary market if there is a high demand from investors, and at that time we want to get rid of the loans, we could sell them at a premium. And in crowdlending, we also have some platforms. Few, but some of them offer us the possibility to exit the investment at any time. That is to sell the loan directly to the platform, and we could recover the capital we have put in plus the interest generated up to that moment. However, Normally, these platforms are platforms that offer us a lower return. Regarding the minimum investment and entry barrier, in the stock market, we can start with very little money because there are many brokers and platforms that will offer us the possibility to buy fractional shares. So even if a share might be worth 100 euros, we will be able to invest just 1 euro. If we want, starting from 1 euro or from 10 euros depending on each platform, we will be able to buy fractional shares and invest the amount we desire. Crowdlending is also accessible, and most platforms will allow us to invest from 10 euros or from 50 euros. There are some where we will need to put in more capital to start investing, and also something to keep in mind here is that it's important to diversify among different projects. Different platforms too, but diversify among different projects, different loans. That is why this minimum entry barrier is important, which in most cases is, as I said, between 10 and 50 euros. Though if we go to real estate projects, some platforms will require a minimum of 500 euros to invest per project. Regarding ease of use and automation, both investments are easy to use and can be made automatically. Nowadays, there are many brokers that offer us the possibility to invest automatically in the stock market, where we can plan recurring purchases of stocks or ETFs every month, or even, in some cases, every week. And this way, automatically, we will be investing without having to do anything manually. As for crowdlending, it is also very simple. We will have to register on each of the platforms where we want to invest, and from there, in most cases, we will be able to invest automatically by setting up an auto-investment strategy. This means that we will be able to set up the parameters of the types of loans we want to invest in. You will see that it is much easier than explaining it. Some platforms even offer us a pre-configured auto-investment strategy. Furthermore, the great advantage of crowdlending is that once we set up this auto-investment strategy, we can set up the reinvestment of the interest we receive, usually on a monthly basis. This is how we will benefit from compound interest. As for regulations, the stock market is very regulated worldwide, and brokers are heavily supervised with deposit insurance available in some countries. Crowdlending itself relies heavily on each platform. There are some platforms that are regulated because there are certain types of regulation, but there is no specific regulation for crowdlending itself. So there are some platforms that will be regulated as investment brokers, and then there are some platforms that are regulated as crowdfunding services provider companies. I mean, like crowdfunding companies. And there are many others that are not regulated since there is no specific regulation for the way they operate. If you want to learn more about company regulations in crowdlending, I've left a link below in the description and also above where you can learn more about the regulations. And which of these two investments is better? Well, there is neither a better nor a worse one, and these are two types of investments that can fit into any well-diversified portfolio. On one hand, if we are looking for long-term growth and can accept the roller coaster that is volatility, the stock market may be a good place to invest. On the other hand, if we prefer more stable, controlled income and receiving returns on a monthly basis, you might like crowdlending. For me, there is no need to choose between one type of investment or another, but rather to decide what percentage of my portfolio I allocate to investing in each of these types of investment. For example, some investors decide to invest 90% in the stock market and 10% in crowdlending. Other investors decide to invest 60% in the stock market and 40% in crowdlending. That depends on each investor and what fits with their personal situation and risk tolerance. In short, comparing the stock market with crowdlending, what are we investing in when we invest in the stock market? We are investing in a share in a company. We are participating in that company. When we invest in crowdlending, we are investing in a loan that can be to companies or individuals. The stock market return can be between 7 and 10% annually, at least that's the historical performance in the long term. In crowdlending, they are offering us between 8 and 14% annually, and on average we tend to get 10%. Stock market volatility is high with many ups and downs even on a daily basis. In crowdlending, there is no volatility. The risk we have in crowdlending is defaults. Regarding liquidity, in the stock market we will have high liquidity, allowing us to sell at any time. In crowdlending, it is lower, and we will depend on the maturity of the loans or the existence of a secondary market on the platform. When we invest in the stock market, we will not have recurring monthly income unless we are investing in dividends with a dividend investment strategy. In crowdlending, we will normally have monthly interest. As for the minimum investment, it is low in both cases. In the stock market, we can invest from €1, and in crowdlending, some platforms also offer us to invest from €1. Usually, we can invest 10 or 50 euros. The stock market is highly regulated, and crowdlending depends on each platform. There is no specific regulation for crowdlending. The main risk of the stock market is market downturns, and the main risk of crowdlending is borrower defaults. Regarding the investment period in the stock market, we can keep our investment short-term or long-term. In terms of crowdlending, we also have the option to invest short-term from about 3 months and also to invest longer-term. And here, in either one, you have to keep in mind that when we invest for the long term, there are more opportunities for our portfolio to gain returns. Now it's your turn. Tell me, what do you invest in? Do you invest in the stock market? Do you invest in crowdlending? Do you invest in both? And if you have any doubts or questions, let me know below with a comment. You know I answer all your questions. Before leaving, if you liked the video, give it a like, it makes me happy and helps the channel grow. I invite you to join the Telegram community where you can share experiences and opinions with other investors. And I also invite you to subscribe to this channel so you don't miss more interesting videos about investments. See you very soon.